massively de-risked. When you de-risk, there's no risk in the markets. And when there's a lot of risk in your markets and something bad happens, then you add on to your risk. Ladies and gentlemen, welcome to Wealth Dom with me, your host, Norbert BM, bringing you the top economic news, our stock portfolio update with what we bought, what we sold, why we did it. And of course, we're going to do a risk assessment and a couple of predictions for the market for next week. We didn't have too many events. Also, we started out getting in some earnings. Tesla did extremely well. It was up like 28% in 1 week, which is pretty amazing. They had a pretty good outlook. You're going to come back Tesla later on in our trades. Also, now let's take a look at the S&P. The S&P index ended pretty much negative on the week. It ended on a 0.85%-ish. Also, the Nasdaq also ended up negative. But what was interesting to see that markets started de-risking. So as I made my predictions about last week, we had a 51% chance or risk, not even chance, 51% risk that something bad would happen in the market. The risk wasn't that high, but it was high enough to, as you can see, have some negative effects on the market. Now, the week that is coming now will be much more interesting. Let's take a look, first of all, at the economic events for the next week. It is just mind-blowing. So first of all, on Monday, we won't have anything. I'm going to come back to Monday when we do our risk assessment. Then on Tuesday, we're going to have from Germany consumer confidence. Then we're going to have on Tuesday, the JOLTS report. This is going to be very important. On Wednesday, we're going to have from Japan consumer confidence, then from Germany, the GDP growth rate, then for the States, the GDP growth rate, and from Germany, the inflation rate report. Now, everything is expected to come in better than the prior event. On Thursday, we're going to have from China manufacturing PMI. From Japan, we're going to have the BOJ interest rate decision. It's going to be extremely important. They're expected to maintain rates. If they cut, hell breaks loose. For PC price index will be released from the States next week. Also from the States, personal income and personal spending will be released. So a lot of data from the States coming up on Thursday. Then on Friday, we're going to close up with China reporting manufacturing PMI. This time the Beijing manufacturing PMI. Before that, on Thursday, we had the NBS manufacturing PMI. And from the US, we're going to have the non-farm payrolls, unemployment rate, and ISM manufacturing PMI. So it's going to be an eventful week next week. Be prepared. Okay, now let's jump into our portfolio movements. First, let's start with our portfolio. Our portfolio was down the last week. It was actually more down than the S&P. It was 1.13% down. We have a combined dividend yield of 2.85%. That means we made some movements. We received a small dividend from the Vanguard US Treasury bond. This is a mixed bond, as I told you. I kind of bought it for safety purposes, and I think it's going to maybe have an effect next week. If not, then the week after that. Okay, our current free cash flow is 7.86% of our portfolio, and we're going to get an interest rate of 3.25% till the next ECB rate decision. The ECB did cut rates last week. We dollar cost average into our index fund, S&P index fund, so it's not a worldwide index fund. We're concentrating only on the States. And now let's get into what we bought, what we sold, why we did it. Okay, so buying. We added, we created, we brought in a new position that is GE Vernova. This is a branch. It's not GE Aerospace. It's completely different from them. They're mainly concerned with energy. So they don't not producers of energy. They actually produce for the energy industry. They produce turbines. They produce grid functionalities. They produce a lot of stuff that we will need if the AI play turns out to be as big of a deal as it should be. So we opened a pretty small position in GE Vernova. We have a 0.76% to the portfolio now. Although we opened this, when did we buy it? On the 23rd of Monday, we opened this position. We're already up like 10% on this. Just behaving. Let's take a look at the chart. Now, this is crazy. I wouldn't suggest anyone to do this. We opened the position up in a RSI almost 70, over 70. So over 70, but we did see a bit of a pullback in the MACD. So it did trigger after a sell signal that we had here in October, beginning of October, it now triggered a buy signal. And I would say that is my chance. We opened a new position in GE Vernova. Okay, now let's move on in adding to positions. So we added to, we dollar cost average in our Vanguard, but we also added to our Vanguard US Treasury bond, that mixed bond. We increased this position to 7.10% of our portfolio. Now let's take a look at the graph. So it was a lot of back and forward in the last couple of months here. As soon as the market fell, this ETF jumped. Now we are in an interesting bullish pattern for bonds, meaning I don't think that the Fed is going to hike rates. They're just going to cut rates. When will be the next cut? I don't know. Maybe going to be in November after the elections. Maybe it's only going to be in December. How much will they cut? 25 points. I don't know. The matter of fact is they will cut, and rates will keep on falling, which means this bond will keep on rising. And each time there's going to be some kind of stress in the markets, either it's going to jump, then we're going to sell it, or we're going to get paid because it yields a monthly dividend. So this is one that I would definitely not only recommend, but I would encourage you to take a look at this ETF. So just search for, because it can have multiple ticker symbols. I have it currently under VGTI symbol. Okay, now let's move on to the next position that we added to, and that is CrowdStrike. CrowdStrike did had a bit of a pullback, and it's still pulling back, so it has triggered a MACD sell signal. So this is pretty interesting. If this is going to pull back in the 280s, I would say buy. Now we added a really small percentage to the position. It actually increased our position. Actually, I can jump back and forth here. But let's take a look at CrowdStrike. It increased CrowdStrike. We increased our position to 1.76% of the portfolio. So not that much, but it's still a big chunk of the portfolio. Okay, we can now take a look at some live graph action here. So this is where they had the big boo-boo, oopsie. And since then, CrowdStrike did pretty well. Actually, we also took some profits from CrowdStrike. If you're following this channel, you already know that we took profits, I believe, 3 weeks back on something like that. Basically, it was up here somewhere. Yeah, at the beginning of October. Now, this pullback, I love this pullback. So we just added just a tinge. It's going to have a bigger pullback, especially with now elections coming up. Who knows? Then we're definitely going to add more to the position. Currently, it is on a MACD sell signal. So it did trigger a sell signal. Has a weak RSI. So who knows? Maybe. This is definitely a stock that we're going to watch and add to if it has a pullback. So let's go back to our presentation here. Next up, we sold. Go to selling. So we reduced our position in Walt Disney, which is now currently at a 1.43% of our portfolio, due to the fact that Walt Disney triggered a MACD sell signal here. We weren't that much up. Also, right now we're again in a negative. Walt Disney. We did buy it much. Oh, wait. I have to go to Disney. So Disney, there we go. It did trigger a sell signal and we bought it far too high. So I'm pretty happy with Disney even pulling back more. And if it does, maybe I'm going to add back to that position. And if not, we did sell it on a positive. So if we're going to get a pullback here, maybe I add just a tinge because we sold off half, reducing the position to 1.43% of our portfolio. And that's it. I don't have high hopes for Disney due to the fact that it's just a massively undermanaged company, even with Bob Iger being there. I don't like where Disney is heading or through, although they had two major, so they should have a absolutely brilliant earnings report. They did have two major hits, Inside Out 2 and Deadpool, but they're gone. Okay, so they had their hits, they're gone. It didn't help the franchise. So forward looking, the guidance will be important on Disney and to see what happens there. Okay, let's move to the next one. We sold or we reduced, sadly, I love this stock, the exporting goods. Also, we reduced this to half. Once again, when we bought it far too high, but we do love the stock. We believe in the stock. It did trigger a MACD sell signal. We held it on a small positive gain there. And this is one they are going to add back to it if it has a good enough pullback. Somewhere down here, I would say, going to add back to this position. Also want to see seeing this correctly. My face is covering everything. No, it's not. So we reduced our position to 1.46% of our portfolio. They're moving on. We sold once again in, we sold the week before, if I can remember this correctly. JP Morgan, we reduced our position to 0.73% of our portfolio. JP Morgan clearly had its days up here. It could come back, but I can see here a MACD sell signal being triggered in the upcoming week. And yeah, we're happy with our position, and if it's going to go negative far enough, then we're going to add back to the position, but we reduce. So we massively de-risk. When do you de-risk? There's no risk in the markets. And when there's a lot of risk in the markets and something bad happens, then you add on to your risk. Pretty much hard to do. There's a lot of emotions implied there, but if you can manage that, then you're going to do a good job. So JP Morgan is going to trigger a sell signal. I can see it triggering. The sell signal is going to go down a bit and we're going to buy that. I know where the bottom is. Draw here a line. This is so not technical mumbo jumbo. Okay, so this is the trend line, let's say, and if they're going to pull back somewhere here, I think it's almost here maybe. So where could we have a pullback? Might take a couple of days. Anything else would be just a market crash. So if we follow this line, then we could see a pullback somewhere here-ish even. Okay, maybe this is the inflection point. I don't know. Remove this line. So maybe this is where at a 216 we could add back to it. I don't think this is going to go down to the 200s. Who knows? Could happen, but it's pretty much unlikely. Okay, so let's move on. That's it with reducing positions. Next up, we closed positions, and for this we're going to jump back to the presentation because we closed up the following position. Merck and Company. Sadly, Merck and Company, really good run. If this is going to trigger a RSI, so it's going to be oversold, I'm going to maybe add back to it. But right now, the entire pharmaceutical markets does not look good, especially the Trump Trump announced RFK Jr. jumping on its team and wanting to make America healthy again. That's also why McDonald's sold off that hard last week. So we closed our position in Merck & Company, a exceptional company. It does have a pretty high PE. It does yield 2.83% yearly. So going to see what they're going to report on October 30. That's where they're going to report their earnings. If they have good guidance, if they don't report good guidance and the stock fails even more, I would say there's going to be a pretty much good trade position. Next up, we closed our position in Procter & Gamble. So check this out. This is a weekly chart. So we close our position on the 22, right there, where it pulled back a bit. So we sold it negative, but with 0.05%, so 50 basis points, it was nothing. We lost a bit of money, but we're going to gain more in the dividends, so I'm happy with it. Now, on the weekly basis, it's right now oversold. This is a weekly chart, okay? So it's not a yearly chart. Everything that you saw until now was a yearly chart. So we sold, but we did have a good sentiment. Just see what happened in the entire week. So this is on the 26th. It went bonanzas. It sold off completely. So back Procter & Gamble gone. Next up, we close our position in Altria. Once again, we see a pretty weak got in far too high. We closed it on positive. I'm happy with it. If it's going to, although it's already triggering a buy signal, maybe this is sustainable. I'm going to leave out its next week. If this is going to turn positive, maybe going to add back to it. But for now, Altria Group, bye-bye. See you next time. Next up, PepsiCo. Sadly, we closed our position. Pepsi it did a job. I was expecting it to go outside the 70 RSI. It didn't do it. It triggered the MACD sell signal, so we closed our position completely. And we made some good money on Pepsi. Okay, and if this is going to get oversold, maybe we're going to add to it. But also Coca-Cola had a pretty big jump, pretty massive pullbacks. It did that. That's a better buying opportunity. Pepsi is currently at 25 PE and a 3.16% dividend. I would say Coca-Cola is the least better stock. Actually, at the current position, Pepsi is a better stock to buy. But Coca-Cola did have a big pullback, and it is a market favorite in case something happens. So it's somewhere there. You will have to make your mind up on your own. Couldn't recommend neither Coca-Cola nor Pepsi. Also, I'm talking through my nose because I have a cold and I didn't shave, but I'm fully caffeinated. So woo! Let's move on to a couple of trades. We did a couple of trades. A massively clear trade was Tesla, of course. We did. Let me check here. 3 trades, 3 good trades. Came in. We saw. We left positive, and that's all you need to know. Really, we made a little bit of money with Tesla here. Now it's moving. On Friday, it was moving towards a oversold RSI. Will this continue? I don't know, especially in the next week. But I'm just going to say one thing about Tesla. They did have good guidance. They have one of the best CEOs, one of the most controversial CEOs. The guy is great. Elon Musk is a great guy. I don't know him personally, but he does move stuff. So he also moves his stock, and he is also a Trump favorite. Definitely keep an eye on Tesla. I would say if Trump wins, Tesla is the stock to own for 2025. Next up, our next trade was nvidia. We don't own any nvidia. So we bought it, we sold it, made some money. Catch you next time on nvidia. If nvidia has a good enough pullback, I would say buy nvidia, because nvidia is going to have a massively good report, even maybe surprisingly for the market. Now we came, we sold, we left, and that's it for nvidia. Pretty good stock, but that's pretty much it for everything that we did in our portfolio. So next up, let's do a risk assessment for the market. Okay, let's do here a little bit of risk assessment. So next week, we have the last week of October and the first week of November. We also have Halloween, but we are pretty much in the last week before the presidential election. So presidential elect is a exceptionally high risk. I'm going to start with 100% risk. Next, let's do here, first of all, a little bit of market assessment. I'm going to open up here the S&P 500, actually the futures. Now let's take a look at the chart of the S&P. We have here a bullish trend that we now broke, first of all, out of on the week before, and now in the last week, which the last week was from the 21st till the 25th of October, broke under this bullish trend. Doesn't mean that the trend is over. It just means that we will have a pullback. So take a look at this, then a couple of lines here. So take a look at this. At this, you're most probably going to see here, due to the fact that we're up for elections, a pullback. Now let's go over our RSIs here. And I made a couple of mistakes here. I don't need you, and I don't need. So I know that we just triggered the 20-day indicator, that we just hit the 20-day moving average. Now the next step will be the 50. So if we break through that 20-day moving average, which on Monday, I believe we will not do. I believe that on Monday, we're going to have a green day once again. So let me take out this moving average and add the 20-day to it. We nearly touched that 20-day. We didn't break through it. So it's a fact that we touched the moving average, but we're above it. Now, if let's suppose we're going to break through it, that's going to be pretty dangerous for the markets. The next one will be the 50-day moving average, but we didn't break it. Even here, here, if I go on the future, we can see that we did trigger a MACD sell signal. So it's in place. So let's add this. A MACD sell signal is triggered, and this is high risk. And we need to test it in order to confirm it. So if you're going to have a test and then a pullback, then it's okay, but we're currently at high risk. Now, the market is not overbought. The RSI, let's take a look at the RSI here. It is in the 50s, so it's actually just medium. But don't get fooled by this JP Morgan. It is the S&P Mini. So it's because we did have a couple of pullbacks here. The RSI is at 50, what was it? 55, even lower than last week. Yeah, it's a 55, so I'm going to leave it at medium risk, pull back the risk a bit. We are still in earnings season, so stocks could go in any direction. So I'm going to add to this a high risk. So earnings, which has a lot of surprises, and especially it's some companies that we like came in with bad earnings that is going to pull down the market. We're going to pass this in as high risk, and we have a lot of difficult economic news next week. So economic events are coming. I'm going to also pass this in as high risk because markets can react or to the report pretty volatile. So we're going to maintain here a 75% chance that something bad happens to the market. Now, if you have the opportunity on Monday to de-risk a bit, I would suggest you do that. Don't forget, on the weekend then, we're going to have an election. Going into the weekend, and then the week after that, we're going to have if we have a lady president or a sir president, and if the presidential election is not clear, then it's going to have a massive risk, massive pressure on the markets, and the risk is going to jump even higher. But for next week, I see high risk. 75 is a high risk for me in the markets. So if you can de-risk on Monday, you have the opportunity, just let the week glide. Okay, that's it for me. You can zoom in on this stuff much better. So we one more time, we have presidential elections happening right about doorsteps. MACD sell signal has been triggered. RSI is at 55, medium risk for me. This is just my assessment, okay? I mean that it is so, how I interpret it. Then we have earnings, which is high risk. Market could be surprised either way, and also the outlook could be, even if the earnings are good, the outlook could be bad. And then we have a couple of economic events that are upcoming that are pretty dangerous for us. Okay, ladies and gentlemen, with this being said, my name is Noah BM. Hope you enjoyed this video. If you did, give it a thumbs up. Also, please subscribe to the channel, click that notification bell in order to get notified whenever we post new videos, both from Mondays to Fridays with economic news and live market updates. And then on weekend, we do our portfolio review as we start here. And with this being said, catch you next time. Bye-bye.